Hello everyone, welcome to Finance, and in this video we're going to discuss about basic charting approaches. So first we have to define what is a chart. Now chart is actually a graphical representation of a data in the form of line, bar, or candlestick. And it is used to magnify a direction. So when we say direction, we're talking about momentum and trend. So momentum refers to short term, while trend refers to longer directional time frame. And then it's very useful to provide insights than looking at absolute numbers. So if you're going to look at numbers, you will likely have less information than looking at let's say a line or a bar graph. So we have four common charting approaches. We have the line chart, we have the bars, the Japanese candles or candlesticks, and we have the Heikin Ashi. So first we have the line chart. It's a visual representation of an asset price history using a single continuous line. Now, this is an example of a line chart. So here we are going to plot the price or the daily price, and then we are going to connect the dots after. So that would help us to understand basically the direction of the price from day one to day two. And looking at this 5-day line chart, that will give us the idea of the, let's say, the general trend of the price of an asset. So when we talk about asset, now charting and technical analysis actually works for if you are, let's say, trading stocks, currencies, and even commodities. Okay, so these are basic approaches. So here we're looking at the Philippine Stock Exchange index values from August 3 to August 12. So if we are going to plot these data points here using the line chart, now we are only going to use the closing prices. Okay, so we're not going to use the open, high, and low values, but we're going to focus only on the closing values. So in this case, we have here um, August 3 value at closing price of 5,715 points. So if you're going to look at here, the start of August, this is exactly the same value here, around 5,715. And on August 4, okay, that's 5775. This is the second dot here, and so on and so forth. So when you connect the dots here, that would create a direction of this line here, also known as a slope, and that will give us an uptrend position from August 3 to August 12th. Okay, so this is now more useful rather than merely looking at the numbers 5715, and then you compare that one to 5995. You may exactly draw a conclusion that, oh, it's actually an uptrend. But if you are going to plot them using the line chart, that would give you an easy reference about the direction of the assets price or the Philippine Stock Exchange index value all throughout the observed time interval. Now here we have the bar chart. It's actually composed of vertical line that shows the lowest and highest price, and short horizontal lines that tell the opening and closing price. So here we are exactly using the lowest, highest price, open, and closing price. So a typical, let's say, bar chart, a one-day bar chart with a positive um, closing price, meaning that the open is lower than the closing. Okay, so it's more on color coded here. So the green one usually would pertain to an uptrend direction of the price that day. So here we would assume that this is the lowest price. set for that asset that day, and the highest price is this. Okay, so when the market open, this is the price, but some of the buyers and sellers actually um, traded at this point, and then at that highest point, and then it closed around here. So that's the closing price. Now, since the closing price is still higher than the open price, that bar will be colored green. Now, here is an example of a downtrend um, bar wherein if you're going, they have the similar components here: open, close, high, lows. But if you're going to look at now, the open or the opening price is actually higher than the closing price, and that would actually make the bar colored in red. Okay, so we had an uptrend bar, meaning that the open is lower than the close, and we have a downtrend bar, meaning the open is higher than the closing price. So let's try to apply the same concept here, the same data points we plot using the line chart, and the same time period, August 3 to August 12, 2020, and the same asset or the same reference, we have the Philippine Stock Exchange Index. So we will be utilizing all the data here for open, high, low, close, and this is what it actually looks like. So here you have 1, 2, 3, 4, 5, 6, 7, 8 days, 8 trading days. So you have 1, 2, 3, 4, 5, 6, 7, 8 candles or 8 bars here. So if you're going to look at here, this is an for August 3, this is a red bar, so that would mean that the opening is higher than the closing. Okay, so that's exactly a downtrend day. Now on August 4, that's exactly, this is the opening price here, and the closing price is actually higher than the opening price. That's why you have here a green bar. Okay, let's try to look at this one. August 5. Now the August 5 data shows that it actually opened 5812. So this bar here is 5812, and the high is actually 59. So this data point here is actually 5902, and then the lowest value is around, oh, so sorry, that's supposed to be 5888. Okay, this one, and then August 5 here for low, that's 5803. So that would mean this data point here. And we have here the closing at 5833. So here, since the opening is lower than the closing, 5812 versus the 5813, now this bar here is still colored green, and so on and so forth. Now, compared to the line chart, the bar chart now actually gives you a lot of information. You can see the direction of the price in a particular day or in a particular observed period, and looking at the high lows, which are not actually presented in the line graph. So here we have the candlestick chart, or also known as the Japanese candle. Now, it is similar to a bar chart in that each candlestick shows all four information. So we have open, close, high, and low, except that now you can see some psychology behind a specific, candle. For example, this one, it still follows the color coding of, green uptrend day. But here, the wick, the lower wick, okay, the bottom wick is actually longer compared to the upper wick, which would give you an idea that this candle is actually bullish. Bullish in the sense that, buyers are trying to pick, the prices near the highs. Okay. And here you're looking at the opposite, which is a bearish candle. So here, if you're going to look at here, the trades are actually happening near the lows. Okay. Here, the opening is higher than the closing, so the candle is colored red. And jumping to the application, we will still be using the four data here. And if you're going to plot that one in the same time frame, PSEI, So if you're going to look at the first candle here, that's August 3. So we can see here a bearish um, red candle. Okay, so if you're going to look at, there's a wick here, a lower wick, but there's no upper wick. Okay, and on August 4, we can see here that even though it's actually a green candle, we can conclude that this is actually a bearish candle because there is no wick at the bottom part here. So same with August 5, although it's green, but if we're going to look at the upper wick is actually longer than the lower wick, so that would mean that we have here most of the trades are happening at the lower price here, and so on and so forth. So here there is more information being disclosed than the line graph and the bar graph. Here you can exactly see the psychology behind each daily trade and the general trend of that specific uh, asset. Let's say in this case we have the PSEI. So you have uh, the daily trade momentum here, and you can also look at the trend of the PSEI in, let's say, this 8-day time frame. So the last charting approach is actually the what we call the Heikin Ashi or Heikin Ashi chart, which is actually constructed the same as the candlestick, but this time they have a modified formula for computing for the closing, opening, high and low. So meaning they capture exactly the average, prices, which now gives you the idea of the specific momentum and the trend. So they can exactly give you a reversal, heads up to, let's say, grab a position or unload a position. So here, if you're going to look at here, these these are example of uptrend Heikin Ashi candles. So if you're going to look at, they still have the body here, but the wicks are actually pointing uptrend. Now, for a downtrend Heikin Ashi candle, you can see these figures here. So we can apply the same here in the PSEI. Now, if you're going to look at, they're almost the same as the candlestick chart, but this time around, you can see longer candles compared to the regular candlestick, and the wicks here are quite longer than the regular ones. Now, it's simply because the computation of this one actually considers this value over here. Okay, and same with this one, it's considering its previous value of averages. That's why it can give you a specific signal of, looking at a cluster of downtrend candles and another cluster of uptrend candles. So here you can see that there's a downward trend here, and then it tries to shift looking at the value of August 5 at 5,815, and then there's a general shift of the trend going up to the last trading day here, August 12 of 5,980. So change of color from red, okay, now to green going uptrend. Now, let's try to compare the candlestick and the regular candlestick and the Heikin Ashi to give us a better picture of how the candles are being drawn and how the candles are being interpreted. So here we have the Heikin Ashi, and here we have the regular candlestick. So we have the same data points here, we have the same number of days observed, but if you're going to look at here, the candles are very different. So here, August 3, for example, you have a very short candle, and then you have a lower short wick here. But if you're going to look at August 3 using the Heikin Ashi, you can see a very long body for August 3, and you have a very long wick, lower wick also compared to this one. Okay, so again, regular candlestick only assumes the open close, high low of that specific day, and then the Heikin Ashi actually considers the average high low closing and opening prices. That's why you can see here individual, you can You can see that the momentum every day, but here you can see that it actually captures the trend. So you have downward trend here from August 3 to August 4, and it tries to shift the trend looking at the average prices from August 5 up to August 12. Okay, so that's all for this video. Thank you very much for watching, and I hope that you learned something. Please do like the video, and if you want others to understand, kindly share this video. And if you need to know more, kindly subscribe so you won't miss any future videos that we're going to make. Thanks for dropping by.